G'day everyone, Boz here from OpenCorp for today's Property Wealth Workout of the Day, our WOD. Now, it's Wednesday and I'm just wondering if anyone out there has noticed that there's been maybe some massive Liberal Party unrest over the course of the last week. But lo and behold, the sun still rose this morning and we're all living, we've got fresh air in our lungs and life is pretty good, okay? I'm being sarcastic, but clearly how this is relevant to us as investors is that a lot of people, remember the media are driving half of this stuff in terms of the political unrest, will have us believe that this is going to fundamentally shape the Australia moving forward and what it means for us. A great opportunity to be able to create some fear and some instability and all those emotive things that they love to do. So what I thought I'd do today is share with you around why it doesn't faze me in the slightest and why it shouldn't faze you in the slightest as well. Now, we've been doing this for a while, we've got a pretty thick skin, so what I thought I'd do is give you, close to a 30-year history on why this stuff to me doesn't really matter in the grand scheme of things. Okay, so what we've got here are the long term and the short term. So I've got some key dates down here, and for those of you that have, like me, been around for a while, you'll probably remember a few of these key dates. And then what we're going to look at is the short-term impact in terms of what happened in the years after these so-called world-ending crises, okay? And just for everyone out there, if you're keen to understand what this means for negative gearing and your tax benefits, stay tuned, give me a couple of minutes, we'll be back to it, I'll wrap up with that, okay? 1985, what happened? Negative gearing was removed. Okay, took it away. Okay, 1991, Paul Keating said this was the recession that we had to have. Okay, that was 1991, pretty major one there. 1997, the Asian financial crisis, the Asian currency was devalued, domestic stock markets dropped about 38%, international share markets down about 60%. So you can imagine the kind of instability and unrest that would have caused. Asian financial crisis in 1997, 1998. 2001, very unfortunately, remember it clearly, September 11, supposed to floor the world for the next 10 years afterwards, but it was only 7 years after that we had the GFC. The global financial crisis and the impact that was going to have, clearly some fundamental behaviour from the US lending institutions that were not kosher, not the kind of rigour that we've got in Australia, and all of these things here, had the potential to have a major impact. Okay, but let's then look at what happened in the short term after each of these things. So between 1987 and 1989, okay, yes, there was double-digit inflation. Everyone always remembers about interest rates going up, but remember what drives interest rates. Interest rates going up is only driven by a positive and moving economy, and prices grew by 50% in 2 years. So the median house price went from about 66,000 to just over 90,000 in that time frame. So a 50% increase in a house price in only 2 years. Pretty unbelievable. Now, the recession, obviously that was in response to this. So that's all kind of tied up together, but you could probably handle a couple of years of downturn if you'd seen such rapid increase so quickly, okay? Interest rates came down and everything kind of normalised over time. So, the Asian financial crisis, 1997, 1998. Well, between 1998 and 2002, the Sydney median house price grew by about 80%. The Melbourne median house price between 1999 and 2003 up by about the same amount. So if you look at a world event where international stock markets drop by 60% and you're freaking out and it takes you 6 years to kind of realize that maybe, the damage is not so bad after all, you might have missed out on close to doubling in a house price in both Sydney and Melbourne within 5 to 6 years after that. Okay. September 11, supposed to have a massive impact. Between 2001 and 2004, the Brisbane median house price more than doubled in that 4-year window. Okay, and then finally, the global financial crisis. Well, there were 3 key impacts here. Number one, it fundamentally reshaped the lending practices of lending institutions. So that's the positive. Remember, if we're investing in property, anyone that's got their own home wants to know that there's rigor and robustness around the lending environment that helps fund these properties. And in Australia, that's why we have a very stable and robust property market. So that's a positive to come out of it. In 2010, a first home buyer, especially in Victoria, could get a grant for their own home of $32,000 if they built brand new. Now, look at house prices back then compared to what they are today. For those first home buyers that actually took action and got into the market and weren't faced by this, been a pretty good financial outcome for them. Okay. 2013, cycles move. Sydney has grown 75% to its peak from 2013 to now, and from 2015 to now, Melbourne has been through a growth curve upwards of over 60% in that time, and all of that has happened, within a 7 to 10 year period of the global financial crisis. So there we have it, guys. Being very serious for a second, I want to empower you to be able to shield out the white noise. Okay, there will always be commentary around instability and unrest, and unfortunately, political parties can have a major impact on that. But fundamentally, the impact, as you can see, is not nearly as big as what the media would have you believe. So, set your long-term goals. We're not in property investing to make money in the next 2 weeks. Stick your course and know that over time we'll be able to take advantage, because so many people won't, because they're not understanding what you understand now around how white noise can impact them. Very quickly on negative gearing, let's say there is change in the next election, then Labor have maintained their position that negative gearing will remain in place for brand new property. We've got population growth close to record levels. If not record levels, we need to house those people somewhere. They need houses to live in. New housing helps solve that undersupply problem. Okay, so if you're smart about what you're investing in, negative gearing will still be there. Regardless, it will probably be grandfathered, so you won't be penalised on making decisions on a certain set of circumstances today. And finally, if Liberal managed to hang on, or the Coalition managed to hang on, they've already stated that negative gearing will be staying. So there we have it, guys. 5 minutes of juice. Shield out the white noise, stick your path, stay true to your goals, and take lessons from history that things aren't nearly as bad as they seem in the Sunday Herald Sun. Catch you next time.